hope everyone's doing well and welcome back to another weekly outlook. So cool. Very boring week in the markets, to be honest, to start off. Purely tell from the size of that weekly candle. I'm sure. Oh, this is, for some reason, this is representing Monday upcoming. But even if we take this candle, look at the size of this candle versus some of the couple of previous ones. Very, very small candle. Inside candle didn't take the previous candles higher or low. If we come on a daily time frame, what we see is just, from that Monday this week onwards, just very, very sideways. All right. Not much offered. It's been in a tight consolidation. Now, this is expected sometimes, right? You have a very large move. Price is what we call exhausted. And from there, you get an accumulation. And we know that repeat cycle of accumulation, manipulation, distribution. That's what you start expecting. Now, speaking to a few people this week, I know people got, potentially burnt by this, where they're trying to trade this consolidation, which is understandable, right? Sometimes you don't know it's a consolidation until it becomes a consolidation, which is fair enough, right? Maybe you saw some displacement early in the week, you see a kick up and you think, oh, you know what? We want to target this daily fair value gap. Let me trade up to that, right? And now that's where it sort of comes into like trading with the trend. Overall, we're bearish with the DXY. So, of course, there'll be scenarios sometimes where you're trading against the trend. You have clear drawn liquidity, which is, perfectly fine. But usually that's why trading with the trend is seen as better to an extent, right? Because it's less likely you'll get caught offside, right? If the expansion is expected in one direction, price can sort of just drop in that direction at any time, right? As long as you're correct in terms of your bias. Whereas when you're counter trend trading, you're sort of trying to anticipate where price is going to potentially put in its highs and lows. But yeah. So now, after this accumulation, what's the plan? Large accumulation, week has closed, have a large weekly fair value gap, which also sits at essentially the accumulation's high / the previous weekly high. I'd be watching this area. I'd like to see a run on this high so we can get a very, typical A, M, D, A. Now, that is the sort of ideal scenario. Now, for this scenario to take place, what we might see first is price run lower, run higher, and then run lower again. Why would that happen, right? That would happen because we are so close. Where price closed last week, we are so close to the previous weekly low. The likelihood is we are easily able to come and take that previous daily low, weekly low, sweep that, still, essentially be a part of the accumulation, maybe make like a nice wick here somewhere, go all the way back up. This is like the real manipulation essentially, and then distribute back this way. Right? I wouldn't expect price to just, take that low and then continue down. If we take that low, it would offset that liquidity this way, take the buy side here, and then offset that downwards again. Right? That's the sort of expectation here. We have an accumulation. We could just run higher from here, or we could sweep the lows and run higher. Either way, we're waiting to see if there's some, nice displacement triggered, then potentially we can consider longs to the top of the accumulation. Right, but that's not really the priority. The priority is once price has taken the highs here and it's in that weekly fair value gap, sweeping the previous high, then we'll be green lighted for continuation shorts on the DXY. If you come over to Forex Factory, right, I would not expect much on the Monday. Monday is a bank holiday, right? Today is Easter Sunday, so which is already a bank holiday versus Sunday, right? Friday was a bank holiday, and usually the Monday after Easter Sunday is a bank holiday across most of the world. So because of that, I wouldn't really expect much for the Monday. If anything, the Monday is probably going to come and add to this accumulation. From the Tuesdays where we start getting, potentially a bit more of a move, there's not really any major news drivers for us to, use that as reasoning. But the Wednesday is jam-packed. Wednesday has a lot of red folders for the euro, the pound, and the US dollar, right? Across the day. On Thursday, we have unemployment claims. And on the Friday to watch for, we've got retail sales for the pound, right? And not much for the US dollar, just this orange folder over here. So overall, it's not really a week that's got a lot of news, right? But if we do expect moves, it will be in the latter end of the week. I wouldn't really expect much on that Monday and Tuesday going into the week. And we do have, a fairly clear plan, so it's worthwhile just waiting. If Monday and Tuesday slowly sort of just dribble their way up here, that's perfectly fine. Now you have the expansionary days of the week, the days with the red folders, to potentially be shorting and catching the expansion downwards. All right, cool. Just past that one second. A very large monthly candle. We've got 10 days left. I'm not expecting a massive amount of, essentially continuation here, right? So this move that we're talking about, where we have this accumulation matrix, it could be prolonged. It could essentially, take a few days to play out. It could take the whole week. It could take more than that potentially. When we've had such large expansion, sometimes, like we said, price gets exhausted, and essentially that would mean that we have a lack of delivery. Price just engineers a lot of liquidity like this, waits, manipulates, might take a few days to go up here, might even reach into the daily fair value gap we've been talking about, then another few days to play that distribution out, which would be towards the end of the month, which wouldn't surprise me if it was something along those lines. US 10-year, you guys probably saw I had it marked on my chart just as we came on. Come out to a weekly time. He was essentially building large high time for consolidation. This was the sort of large major low, large major swing high. And from there since, we've had discount, premium, discount, premium, discount, and then back into this premium. So what's the plan from here, right? What do we want to see priced? I think, the odds are that price will just stay in this consolidation. I know this is a large move one way. It looks like, a solid bit of displacement. But honestly, it would not surprise me if this is just essentially a big liquidity sweeping this internal liquidity, and we're just headed back down, probably deeper into the disc. But now that it's becoming more and more evident that we're in a consolidation, I wouldn't be too hopeful of, when price makes this move down, we can probably target this sell side. But to target this sell side past it would maybe start sounding a bit ambitious, right? If we come this deep into discount where we're taking the sell side, the likelihood is that I would like to see price deliver even lower. It wouldn't surprise me if we're seeing something like price coming down, taking this low, maybe accumulating a bit and then going back up, and until price is ready to break the accumulation essentially. But even in accumulation, although it's because it's a higher time frame, we can still get a read on price, especially in the short and midterm. Here we know we're in the premium, just purely off of that basis. Logically, the next move you'd expect in a actual accumulation is for the next move to go into the discount. That's supporting our sort of bias right now, where we swept all this buy side, prices come into that premium. Now we'd like to see the move back down, right? We're looking for a bearish, US 10-year 1 yield, but very similar to DXY. This may take a little while to play. I wouldn't surprise me, they're very similar charts at times, not always, but you have these bunches of consolidations, and then you get these sharp news. Even here, right, from 28 Feb roughly to 26, so a whole month of just completely sideways, and then in the span of 1, 2, 3, 4, 5, 6 candles just dropped. Crazy. And then the reverse, 1, 2, 3, 4, 5 candles just straight back up, even bigger, right? So now we've had a big move both ways. When it's probably go back into a consolidation a bit. Now we knew we swept some major buy side. What we wanted to see was price, essentially give us some solid retracement here. Previous weekly candle is actually an inside candle. It's not taking the previous candles high or low, right? And when we come out daily time frame, we even 4 hour, we start seeing the price action is a little bit sideways. It's not crazy sideways. It's not, a massive accumulation by any means, but we've engineered some sell-side liquidity. I would mark 1, 2, 3, all as relatively equal. Even though this low is swept, right? I would consider all 3 of them as liquidity points. Now, what I would like to see from here is price to run lower. Even if we are headed higher, right? I like price as a minimum to come and take the previous weekly low, take those relatively equal lows, and then we can consider long. If price takes a previous weekly low and it's not, sort of ready for that reversal, then I'd be paying attention to this weekly fair value gap over here, those targets. Once we hit those, if we're getting some sort of clear displacement higher, then we can say, okay, yeah, price is headed back to the highs. We have a buy side target here. We can push for that. But as a minimum, right, I would like to see these lows run out. Once these lows get swept, then I'd be happy to entertain the longs again for the euro all the way back up to most likely this level next, around 0.876. This would also mean, right, so if we're bearish on the DXY, essentially, at the same time this is playing out and we want to be bullish on the euro, right, where does that leave our targets? I remember we marked some higher time frame targets last time. I believe this is a different feed to the views. Okay, yeah, here we go. Cool. Yeah, price is very, very close to this next buy side target we had, and similar again. You would have thought it would be similar with EURUSD and the DXY. We've got an accumulation, right? And it's always interesting to see these things. It's the sort of market synchronicity where we've talked about euro separately, we've talked about the dollar separately, and now when you come together, it's just representing the same thing. Just always goes to show how the market sort of flows, fits together like a machine. But yeah, essentially you've got the matching accumulation. You're very close to that buy side target, the same way DXY is close to that sell side target. So now from here, I believe it's a scenario of either ways. The thing is, we want essentially a retracement first of all. We're going to have this nice weekly fair value gap, and down here you guys can see I marked the daily fair value gap. You want to see a run into this to go higher, but considering the proximity once more, there's a likelihood we could just come and hit the high, then retrace, hit the weekly fair value, and then up again. So it's just very similar. Eyes on the DXY, and this should be easy enough to follow. You don't have to shuffle through both of them. They're essentially doing the same thing but opposite anyways, right? But nothing interesting, I'm afraid. All my crypto traders, everybody watching the crypto markets, just still in general liquidity. We've once more we set the previous monthly low, had somewhat of a move higher. I wouldn't really consider this displacement. This is just essentially one big messy consolidation, just jumbled up price action. From here, again, just very flat. When price is sort of sitting at the equilibrium, it's hard to say, which way it's gonna go. Because when you're at the equilibrium, it's essentially, the two simple scenarios are either retrace deeper or start the expansion. Right now, Bitcoin is showing neither. It's not giving signals for any of them. So what can you do? Absolutely nothing. What I would be doing if you're a sort of long-term investor is, if price starts heading down, look to add more below this level, right? If we sweep this level, essentially what I'm getting at here is, right, if this is the current monthly low and we're approaching the end of April and Bitcoin slowly comes down here, and eventually you're anticipating that it will reverse in the long term, which is my opinion but not financial advice, the likelihood is that it would sweep the previous monthly low and then reverse. So therefore, it would not be a bad idea to add to positions below this. But if you now displace higher from here, of course you can still add to your positions, but because you're buying at a more expensive price, you're buying in the premium, it's probably not as wise to add as much into your positions as it would be to add down here, right? That's of course your choice, however you want to do it. But yeah, I'd just be patient here. I just leave that trend line, but it's staring at us in the face all the way from this high like this, going like this, just plain and obvious. Eventually we want that buy side run, but you just need a bit of patience with price consolidating. Lastly, S&P, also been a bit of a messy chart. Monthly candle, equilibrium hit, sell side liquidity swept, big displacement up. Nice weekly candle close here. Now this week again, of course, similar across a lot of markets. It's been a very, very, very slow week after the previous 1 or 2 weeks being heavily expansionary, right? And what we can see, of course, inside weekly candle, like I said, it's not swept the previous candle's high or low. Come on a daily, looks very, very messy, nothing interesting for us. Come on a 4 hour, we see a accumulation building. So what is the favored bias from? Now, I would really be paying attention to that monthly close. When this new week opens, I know it's very messy, I know it's not very clean, but I would essentially just mark out, I believe this is the previous weekly low, should be. I think this low might actually be the previous week, but we'll go with this as the sell side target for now, right? Go like that. Yeah, of course, that is quite far past the previous weekly low, right? I would pay attention to this sell side, and I would also pay attention to the actual previous weekly low, which is, I believe, this low here, right? Price is very close to this. If price can come back out on a weekly, price can sweep the previous weekly low, give a kick this way, I think it's a very obvious target to target both of the previous candles highs, 1 and 2, potentially past that. If, of course, price is, essentially going to the previous weekly low and then displacing lower, then we can start to maybe this is a second leg in price action. Maybe this is somewhat of a retracement. But from the looks of it, honestly, I'd be a bit hopeful with the stock market. I think, because of Trump's news, everything regarding the tariffs, where they keep changing details here and there, the market's confused. When you get confused, there's a lot of volatility and there becomes a lack of sentiment, right? Investors aren't confident in a direction when there's no clarity. So therefore, will they want to invest in risky assets, risk on assets specifically, right? The stock market? Probably not. I know we spoke about something similar last week or maybe before, but that's still what the market's saying, where investors are just not comfortable, confident. But my opinion, with a bit of foresight, I think it is leaning that way, right? Especially even from a technical perspective, we've had a massive drop in the S&P, right? If we go from the absolute all-time high right now to where we dropped to, we dropped about 20, almost 22%, right? That's a massive drop. In an asset so big, that's a large. And now from there, we sort of retraced back into that move. So again, if the monthly closes strong, the weekly, of course, like I said to you guys, is taking that previous weekly low, pushing a bit higher, then the likelihood is, right, come on, that 4 hour time frame, very zoomed out, that this may be a failure swing, is what we call it here, where it didn't take the previous low, but this is essentially going to be the second leg for the market make a buy run all the way back to the highs. Yeah, guys, that is it for the weekly outlook. As usual, like I said, guys, it's Easter Sunday today, so I'm sure everyone's had a long weekend. Hope everyone's had a good weekend, and more importantly, I would stay off the charts for tomorrow for sure, potentially even Tuesday. Let the week form, let the price action come to you. Once you have some proper displacement, you have a good read on price, then just get back. As usual, any questions, any help, just drop me a message.